Before we do anything, let's talk about planning your money. So I will always say, if you are financing your home, you need to have spoken with the lender and gotten a pre-approval before you even start looking at things. Otherwise, you may look at something that's unrealistic for your budget. However, a lender is not a financial planner, and only you can figure out what your budget will be for this home. So get a pen and paper ready, because if you are financing, this is going to be important. So you want to look at your total monthly net income. That's after taxes. And you want to figure 25% of that would go toward your housing. So that 25% means principal, interest, taxes, and if you're going to a condo, an HOA fee, not just the mortgage. It's got to include everything, because then you're going to have bills, etc. for the month. So you want to figure out 25%, and whatever that number is, that should really be your max. It's always really disappointing when you're doing tours with buyers and they're like, well, let's look at places that are a little bit more than our budget. And then they fall in love with the features of those homes, and then everything else that's within their budget is just really disappointing to them. So really figure out your max and make sure that you don't go above that. Let's talk about down payments. It's one of the things people ask most about when embarking on the home buying journey. So if you're financing, well, a lot of people think that the minimum down payment required is 20%, and that's actually not true. So with conventional loans, if you have a credit score of 680 or higher, you can likely qualify for a loan with only 3% down. If you have some credit issues, an FHA loan might be the route you take. And if you have a credit score of 500 to 579, you can get an FHA loan, but you'd have to put 10% down. If you have a credit score of 580 or higher with an FHA loan, you can get a loan as little as 3.5% down. There are also VA loans for veterans, and with those loans, it's 0% down, but there are a lot of restrictions and requirements for the VA loan, especially if you're moving into a condo versus a single family. So I just gave you three options: conventional loans, FHA loans, VA loans, and the different amounts required to put down that are not necessarily 20%. The next costs associated with your buying process are your closing costs. And some people think the closing costs just go to one person, but that's actually not the case. Closing costs go to, for example, your attorney, your lender. Some of it goes into taxes, appraisal, recording the deed. A number of things are lumped into the closing costs, and those will all be outlined with your attorney at your closing. And you should plan for your closing costs, depending on where you live, to be between 1 to 4% of the overall transaction. So 1 to 4% is a good guesstimate for your closing costs. When you're searching for a lender, there are actually three different types of places where you can find a lender. One is a specific mortgage company. The other is a bank or a credit union. And the other is like a big online bank. I recommend that when you are searching for a lender, you reach out to someone in all three of those, because they'll all have different rates and different styles that might appeal to you. And the last cost to consider are your out-of-pocket costs. The main one being your inspection. You can expect your inspection to be between $400 and $600, and that is a cost paid by the buyer before closing. There are a couple of types of inspections that can be done. One is your traditional inspection, which is done between the offer and purchase and sale, when the inspector comes in, inspects the whole home, make sure that there are no things like mold or a faulty HVAC system. You can then request either for those things to be fixed, or you can actually back out of the offer before the purchase and sale and get your deposit back. Some people also do a pre-offer inspection, and that's an inspection done before the offer. It shows that you're interested, but you just want to make sure everything is good so that you can waive the inspection contingency. And some people do an informational inspection where they trust that the property is in good shape, but they just want to make sure that everything is good to go before they sign other documents. And that will be with the understanding that you're not going to expect the seller to make any repairs, because you're doing it for informational purposes only. How do you find a lender? Well, you can ask me, You can ask the agent you're partnering with. You can ask a friend who has bought a home before to give you a referral. An important thing to know is that if you ask me or you ask another agent, it is actually illegal for us to accept any sort of kickback from a mortgage broker that we recommend. So you can be assured that those deals are not going to be shady. Most of the time, we have worked with a lot of really good people, and we'll have some great referrals for you that you can trust. No kickbacks allowed. I'm going to share with you a really great tool prior to reaching out to lenders. I want you to Google CFPB Rate Checker. When you go to that site, you can enter your credit score, the price of the home you're going to buy, your down payment amount, and the state that you live in, and it'll bring up a graph of all the different rates being offered by lenders in your area. So that's a good tool to have when you're reaching out to agents. When they come back with rates, you can reference the different rates that come up on the rate checker. So again, that's CFPB Rate Checker. Google that. Enter your information on the right-hand side, and you'll get some really valuable insights on the current rates in your area.